So a lot of you guys may be new to trading, may be new to Forex trading. Well, that's what niche I'm in. I'm in the Forex industry, and I just want to give you guys a little bit more realistic expectations as far as trading Forex, because it takes a lot of discipline, a lot of time, and a lot of persistency. So it takes a lot of things in order to become profitable with the markets. Now, if you're talking about just reading the technical analysis, that's only like the 20%. That's like the 20%. The rest of the 80% is managing your emotions, being able to control your psychology, make sure every order has a stop loss, every order has a take profit, being able to bottle those emotions while you're in drawdown. So, and if you guys don't know what drawdown means, drawdown is when you see those red numbers floating. And psychologically, guys, red, it does something inside of us just the same way that green does. It's just green is more of a comfort color. Red is more of a, more so on the negative side of things. So a lot of times when we see that red, we might close a position or we may second guess ourselves. The main goal you guys want to do is to build a strategy, build a plan. Take your time. I've been trading in between 4 to 5 years now. And what I've noticed is I was on year 2, maybe 3. And at that point, it wasn't even my technical analysis. It wasn't even me reading the charts. It wasn't even the fact that I was predicting which way it was going to go at that point. At that point, it was just the psychology aspect of things. Like, I wouldn't hold my winners. My winners would go like up and up and up and up, even though I've back tested this over and over and over. And I've proven to myself that I can hit this, risk to reward out of 10 trades. So I would practice how many trades could I hit out of 10, and you mixing that along with your risk management plan, and you're bound to win. Once you get pretty good at predicting the markets and the precision on when you do get in the markets. So, my main point to say with that was, it was the psychology side of it that I couldn't really get, fully down pack at the time. But the more trades you place, the more it's almost like, okay, I've been placing so many trades over the years. Where has it gotten me? I had to ask myself a real question. So I've placed thousands of trades over the years, and I'm sitting there like, okay, it's not the fact that I can't predict the markets, and I don't have a strategy at this time. I didn't have a proper risk management plan. I would have the initial capital in the balance. The money that I would make, I would risk almost that whole percentage just to aim for even bigger profits, which isn't the way that you should be trying to approach the markets. You should be trying to have it as a calculated system that you work along with, obviously, your edge and you studying the markets. But if you're risking 1 to 2% a trade to hit 1 to 4s, 1 to 5s, it only takes for you to hit one trade, and you can get all of those losses back that you lost within those 5 losses. It's all just a numbers game mixed with skill, time, and repetition. You shouldn't approach the market saying, I'm gonna get rich in the next month, the next 3 months, even the next 6 months. Guys, this is a manipulative market, and people that see you doing this may not know all of the work that you put in beforehand, prior. They just see the results and see that you have this system already set at this point. They see that, you do the same thing day to day, week to week, and it looks simple. You're just clicking the press of a button and making money. That's what it looks like to them. But it's just a crazy aspect, guys. You're making a living off your mind through controlling your psychology. Everyone can get technical analysis, but waiting for that last candle close above a higher high, or it could be that little bit more patience that you have in order to get into a position, because a lot of times market like to do one crazy stop loss hunt. If you guys don't know what stop loss hunts are, go search that. It's basically where the market knows where everyone is going to put their stop loss. So you want to already approach the market and think of ahead of what the market is going to do. And some of that comes with experience, and a lot of it comes with journaling your trades. I always say about journaling your trades, guys. Journal your freaking trades. You need to journal your trades, because if you don't journal your trades, you will not see the data that you have been brain fart. You guys will not see the data that you have been building over time, so you can go back and look at that and see, okay, bam, I see what the problem is. I need to stop doing this, or I need to implement this. And you just fine tuning this strategy. You fine tuning your strategy until you get something that's nice. Don't strategy hop. Get a mentor. Make sure you don't have 3, 4, 5 different people you're listening to, because some people teach fair value gaps, liquidity, displacement. I understand it somewhat, but I wasn't taught that way. I was taught through Swaggy C. I went through his course, which, you know, thanks to him, I give props to him. He's done a lot of work in this community, in this niche itself. So, but I bought his course and I watched all of the content, also with trying to implement it myself into the markets and see what works for me. Everyone is not going to trade the same. Yes, I will eventually drop content on how I trade, and actually I'm making a course. I think you guys deserve a course. You guys deserve a course. Should be a course coming soon this year, sometime, maybe mid-ish, and I will let you guys know. If you go ahead and DM me early, then possibly you can get 10%, maybe 20% off, depending on how I feel off of the course. And I'll show you guys how I trade. Every small clip may be a clip of something new to learn within the markets. Maybe Fibonacci tool, maybe market structure, maybe higher highs, higher lows, maybe uptrends, downtrends, maybe consolidation, maybe volatility, maybe sessions. But if you guys want to see how I trade those, you know, instruments, I trade. If you guys want to see how I apply all of that together and trade my strategy, then I'll try to be day-to-day. I'm pushing to be day-to-day, but I'll be as consistent as I possibly can be. Back to my point. Guys, don't over-leverage your accounts. Once you take a trade, close the laptop, close the tablet, well, throw the tablet. I don't know, because maybe you break it then, right? So don't throw your tablet, don't break your screen, don't do none of that stupid stuff. But make sure that once you hit your winning trade or your losing trade, with me, I either lose 1% a day of whatever the capital is. I either lose that 1% and I'm done for the day, or I approach a whole nother setup for the next day or the next session with the same game plan, same strategy, and not all the time where we're going to be disciplined, guys. We're not always going to make the best decisions in the market, but we're aiming to be the most disciplined as we can be. But anyways, guys, you get the point. The reality of trading is it's going to take you time. Make sure that you don't just go and quit your job or do whatever and say, hey, tell your family, everybody, I'm going to become rich within the next 6 months, a week, damn sure not a week. But make sure you guys take it slow with the markets, journal things so you can learn as you go. Be self-aware of where you're falling short. So if you're not patient every time, and that's why your trading balance keep dwindling down, then that means you need to do more work in that patient area towards your trading. Hit that follow button, support your boy, and we're out until the next video. You guys stay safe, stay blessed, and we're out.